Average price of a new home around the country, more than 426 grand. Tariffs on building materials and mortgage rates getting close to 7%, both contributing to rising costs as well, as Doug Flynn joins us, certified financial planner and co-founder at Flynn Zito Capital Management. So this is kind of our way of widening a conversation we were having earlier, because we're talking about the mayor's race here in New York. This guy, this socialist guy, that Mamdani, right, that becomes the Democratic nominee, he capitalized, I think, on this city being very, very expensive. And people said, we got to try something. And he's like, all right, I'll give you everything for free. Let's try that. Okay, so that is basically what happened last night, or at least in part. Obviously joking a little bit. But nationally, this is still still a really big story, housing affordability.
It is. And there's only 3 of the top 50 metropolitan areas in the United States that still meet that 30% or less requirement that typically you used to use to say how much of a house can you afford. And those areas are just Pittsburgh, Detroit, and St. Louis. And that's probably because the median price there is between $250,000 and $270,000, unlike that median average you quoted before for the United States. And even more so, those are just the medians. And people who know math know that the median is just how many houses sold above that and below it. The average price of a house that sells in the United States is over $522,000. So it's almost $100,000 more than the median price. So when you start looking at what the average price of a house is and what the real costs are, that's why in places like New York and Boston, where it's going to take almost 70% of your income, or in LA, it's over 100% of your income. It's going to be to afford the median price in those areas. Something's got to give. And to your point, what are we going to try differently? Well, one thing we could try is maybe getting interest rates a little bit lower. We don't necessarily want the house prices to crash, but one thing we could do is lower the interest rates, for sure.
Would that be enough? I mean, that's going to happen at some point. Interest rates go up, interest rates go down, and they will probably, their next move, we think, will be down, right? Or is there something else in the dynamic that needs to change? And I assume you're not going to say it's a government solution. So is there something else in the market dynamic that might change, or it's just lower rates?
Well, the market is going to adjust. There's no question about it. The housing values are going to not only go up and up and up. Now, admittedly, they've built too few houses. Even though more inventory is coming up, the buyers aren't there, so that's not helping. So there will come a point in time where prices will come down. I've been doing this long enough to have seen multiple points where the real estate values do go down. People don't notice it so much because they're not checking the value of their house every day like they do their stock portfolio, but it does go up and down. So I think it's going to be a combination of those two things, and we do need to build more. There's no question about it. They need to build more affordable housing, get people going. The younger people are absolutely getting priced out of the market, and they're not buying. The average age of a new homeowner is getting well into the 40s and 50s, and that's ridiculous.
But it's weird. They don't really come down much, unless they come down a lot, right? Does that make sense? In other words, we've had moments in time. Like in the early 90s, there was a real estate recession. It was like 91-ish or so. There was.
Exactly.
Okay. So something like that, maybe. Yeah. But since then, have we really had anything like that? And maybe we have, other than obviously a disaster in the 08 period, which you don't want to have.
Correct. Those are the two. You don't want to have either. Those recessions can do that for you. I think, look, we would take sideways valuation on the housing market if it allowed people to catch up. You need your earnings to catch up. You need rates to come down. So eventually things will improve a little bit, even if the market doesn't go down or crash. But it could soften a little bit. And a lot of real estate, as you know, is very regional. It's coming down in areas like Florida and some other places. Even if it doesn't come down necessarily in the Northeast, a lot of the housing value that went down has been in the South and in some other areas. The Northeast is actually up in this period. Well, so it's very regional and very individual, neighborhood-wise. So you have to look for those opportunities.
And when everybody thought COVID would kill New York and then it would be cheap, and now it's more expensive than ever to live here, as we found. I mean, that was a big part. Don't you think that was a big part? Whatever you think of this guy that won in the primary, a big part of it. It's just really expensive, especially for young people to live here.
Well, New York has done a lot of terrible things with the rent-controlled apartments, where they won't let the owners of those places refurbish them and get at least a fairly market rent. So there's thousands and thousands of unrented places because, the government wants to control what you can do or how much money you can make, and then they're surprised that there's not enough housing when there is, if you just open that up and you do some conversions of some of this unused corporate real estate. But, that's why this guy's getting some play here.
No, that's why everybody's clapping at the exchange. They heard they're going to be able to ride around on the bus for free if he becomes mayor. Thank you, Doug. Doug Flynn.
You're going to be on that one.
Yeah, closing bell time.